السلام عليكم جماعة وألف الصلاة والسلام على سيدنا محمد وعلى آله وصحبه وصحباته أجمعين. Thank you to the Institute and Denton for this kind invite. And I will read my notes. I'm heavily jet lagged. I usually don't read notes, but I'm not sure I can do it without my papers today. I'm sorry. Moral responsibility in finance, a Qur'anic perspective. And I want to share a few ideas, a few items with you all. It is argued that today Islamic finance has become more of a brand name and less of what the essence of Islamic banking should be. Indeed, it's a fact that the actual financial obligations and implications experienced by the ordinary end users, both in retail and investment banks, though based inside the framework of Sharia compliance, do not differ much from the conventional. It is also alleged that a formalistic approach in private development has been adopted, and the attempts of many researchers, bankers, scholars to find ways for the two systems to work coherently together within the global economy and be competitive with each other have given rise to a hybrid that share the same conventional banking business practices. In a way, this approach has diluted the features and peculiarities, and I may venture the raison d'etre of Islamic finance. Moral obligations and responsibilities, which are the topics of today's workshop, in Islamic finance find their sources in these spiritual realities that are enunciated in the Quran and the Hadith. But in turn, they must result in products that are identified as Islamic. Otherwise, the end users, they will not see the difference. A well-defined spiritual framework must be fully appreciated and accounted for, and full credit must be given to it. If a blur, and I suspect in the long term losing proposition, has to be avoided. To circumvent or ignore the spiritual framework and mimic with great effort and ingenuity, I must admit, the conventional environment is, I am afraid, in the long term, a route to failure. And perhaps nowhere the failure of moral obligation in connecting spiritual realities and private development is more apparent than in the cornerstone of Islamic finance. The much talked and perhaps misunderstood prohibition of interest rate, or as we say in Arabic, riba. It is known that Quran at 275 states, Bismillahirrahmanirrahim, أَحَلَّ اللَّهُ الْبَيْعَ وَحَرَّمَ الرِّبَا. Usually translated as God has allowed sale and made riba forbidden, haram, where riba is understood as an increase in capital loan through the mere passage of time. This is indeed the moral obligation that recognizes the exploiting nature of riba and the need to preserve people's rights, saving them from harm, and ensuring the welfare of society. But a deeper spiritual reality lying behind the context of moral obligation can be found in the Arabic language. Indeed, whereas in Islamic finance context the usage of word haram has become to mean forbidden versus halal, permitted, linguistically the first meaning of haram in Arabic is sacred, in opposition to halal, profane. Hence, the above-mentioned quote, أَحَلَّ اللَّهُ الْبَيْعَ وَحَرَّمَ الرِّبَا, should be more properly translated as God has made sale profane and riba, again the increase in capital loan through the mere passage of time, sacred. In other words, sales belong to the human sphere whereas riba belongs to the sacred. And God has reserved it exclusively for himself. How? What does it mean? It means that in a Quranic perspective, only Allah is allowed to deal with loans with a fixed period of time. In Arabic and many times in Quran, ila ajalin musamma. Quran 9:111 states clearly that Allah has made with humanity a commercial contract, a business deal. Human souls are loaned from God for a fixed period of time, and God will buy them from the believers, which in turn will sell them back to him in return for heaven. In other words, people take their souls that again do not belong to them, but Allah owns them as loan, dying from Allah for a period of time before selling them, which is the selling, only things allowed to humans, back to Allah, so that they, the human, can gain the necessary riba, which in this case is entrance to paradise. And this is quite clearly stated in Quran 276. It is then important to recognize that in a Quranic perspective, the only loan that people can take for a fixed period of time is from God. And that they will repay this debt by surrendering their souls back to him sooner or later. Hence, the commercial contracts permitted by Sharia between people are indeed mirroring the contract God has made with humanity. Riba being sacred, only the Lord is allowed to indulge in it, whereas sales, being profane, are open to everybody in this abode. To proceed further, and here I come to product development and the responsibility of Islamic banking and finance. Are these reflections good for scholarly debates only, or do they have a practical bearing on the states of today's world? The answer is, I'm afraid, pretty simple. If you look at the global economic crisis, you will notice that its origin is the recklessly creation and distribution of credit made possible by the fictional way money is currently brought to existence. Credit creation, and this is the core thing I think today, is nowadays out of control and is purely an accounting process that does not involve any intrinsic value money or real activity. How does it work? When a loan is extended by a conventional commercial bank, the borrower is recorded with a double entry, one debit and one credit. The debit denotes him as a debtor to the bank for the loan taken, while the credit entry denotes him as a depositor for the amount extended to him. And in this way, money is created. These are simply accounting entries that do not involve the movement of any physical, tangible goods or real human activity. Banks do not lend their own money or the money of their depositor, but simply obtain the client's agreement to pay this money back plus something on the top of it called interest. In a plain word, banks are creating money out of nothing and charging riba on this. Suffice to say that nowadays only about 3% of money around is in the form of notes and coins, whereas the balance, which is 97%, is electronic money created into existence, brought into existence by commercial banks with a few taps on a keyboard. And this is the very essence of what God has forbidden in this abode, but is also at the same time the very hinge around which the conventional system functions and works. Furthermore, There is no control on the extent of credit creation. New loans create new deposits, which in turn enable new loans to be made. The more money is created, the more the bank can lend, and the more interest is charged. Money creation basically depends on the assessment of the banks. And because money supply is created as debt with interest, it means that there is an ever-growing mountain of debt, ever, by definition, bigger than money, which makes the debt unpayable. And this has resulted in the disproportional leverage between tangibles and credit instruments. For the sake of example, in 2010, the gross world product was something like, I think, 79 or 70 trillion US. At that very date, a figure that I cannot pronounce, but is not a mathematician, but was 12 times this 70 trillion US dollars was in the world in forms of debt. This debt will never be paid. This issue, the issue of money creation through riba, is at the very origin of all sorts of social, economic, and environmental problems. Moral corruption, enticement to break the rules, endless greed, people living well beyond their means. People think they own something, when in reality they are debt loaded for a fixed period of time. When the debt comes due, they found themselves unable to repay it and hope to reschedule, hopefully. Communities, instead of focusing on their own abundance, think of themselves as poor, as they are discriminated against by banks. And the list is very long indeed. And what is Islamic banking stand on this? Islamic economic theory has very clear ideas on the nature of money, its features, and how it should be created. The need of money to possess an embedded value, the linkage to the real economy, and the need to be the product of efforts and work. In spite of this, I'm afraid Islamic banking has simply copied the conventional way of money creation. It does operate under the fractional reserve system and has brushed aside hundreds of years of very efficient and successful experiences. I come to my conclusion. This failing of Islamic banking to implement well agreed upon Islamic economic principle, I would say to walk the talk, epitomizes, in my opinion, the delinkage I was mentioning before between spiritual commandments, I would say realities, and private development. And this is due to what? I don't know. Timidity, being Islamic finance Islamic, and so perpetually on the defensive? Many can be the reasons. The fact remains that Islamic finance has a strong personality and tenets that, like it or not, are God-given. They can be accepted or refused, take it or leave it, as at the end of the day is a matter of personal agreement and responsibilities. But once the choice is made, full consequences should be drawn. Bending Islamic finance rules, watering its values, and de facto, because this is the reality today, replicating a guaranteed and fixed return environment to accommodate markets and banks' requirements and expectations can only add confusion to an already very confused financial world, and at the end, it will spell the death of Islamic finance. Thank you very much for your attention.